Hello, everyone. It's 4 o'clock Eastern, and coming up today on the final bar, we're going to break down what we're calling sector setups, looking at the 11 S&P sectors, thinking about what's working, what isn't, how to sort of top-down break down the sector movements through the close today. We have Danielle Shay from Simpler Trading joining us to share her take on the markets and some S&P broad charts. We'll finish with a 3 and 3, get you set up to wrap up the day and prepare for tomorrow's price action. Ladies and gentlemen, this... Good afternoon, everyone. This is Dave Keller, Chief Market Strategist at StockCharts.com, coming at you from our headquarters in Redmond, Washington. Thanks so much for joining us today. Last week was our first week with this new show, The Final Bar, and thanks so much, everyone that sent feedback in. It's really, really helpful, and hopefully we'll keep improving the experience for you as we wrap up the day's trading. And again, what I love about looking at charts after the close is it gives you a chance to take a step back to sort of process what's happened and think about how the short-term price movements fit into the big picture. And I think that's one of the most important benefits that charts give to you is that long-term perspective, right? Putting it all in proper context. It's so easy to get caught up in the short-term movements. And so let's make sure we have the proper orientation with the long-term trend in mind. We're going to start with the daily chart of the S&P 500. This is today's trading after the close where we locked in. You know, it's interesting, just looking very quickly at the last 5 days, we really ended up toward the lows for the day here. It was interesting as we started getting ready for the show. Markets are at new highs for the day, breaking above the close from Friday, and all of a sudden, since then, we've gone right back and round trip down to the lows. And again, that's sort of the danger of attributing too much to, intraday movements. A lot of times there's a reason why we call this show The Final Bar. A lot of times when the markets open, we start drawing conclusions based on how the bar looks visually during the day. And I would always remind you, the bar isn't set until the close, right? That final bar is active until the market's closed. And so now you can start to understand where we're at relative to where we've been. So now this day has actually changed a lot. Earlier in the day, it looked like a very constructive kind of building on the momentum from before. Now, all of a sudden, this looks a lot different, right? We sort of opened above the 50-day. We traded up to 2960. But now the S&P's closed back down on the lows from, I think that's Tuesday of last week, which was the big down day coming off of the resistance levels there. So overall, definitely a mixed picture, and we're going to see that as we go through. I think that's a theme we're going to come back to. There's a lot of positive signals, but a lot of more constructive signals as well. And hopefully, we'll try to unpack one versus the other, make sense of where things are at. In terms of the broad indexes and broad movements, I want to jump real quickly to the market summary page here. Let's just look at each segment here. So once things sort of unwound down, the S&P down almost 0.5%, 42 basis points, with the NASDAQ down a little less, down only 22 basis points, just under 0.25%. Very interestingly, small caps actually were one of the better places to be, with the Russell 2000 down just a skosh, almost flat for the day, while mid caps down the most out of all the broad indexes, down almost 0.5%. So, a lot of times you get that theme where it's sort of large, then mid, then small in order. This shows you sort of that disconnection where small caps pretty okay, actually flat, mid caps down a little clip, and then the S&P sort of in the middle. So definitely a mixed bag here. As we wrap up looking at the sectors, communication services actually ended flat for the day, followed by real estate and materials, then utilities. On the downside, you had energy and staples and financials. So that's really a mix of sort of offense and defense. Arguably some more defensive stuff up on the top with real estate and materials. Communication services is kind of mixed. You've got the old telecoms, but you also have things like Facebook in there. So it's sort of a mixed bag versus offense versus defense. But so overall, quite a mixture from the top to the bottom for the day. Looking down at the industries, you had networking names up 0.5%, telecoms up 0.3%. That's why communication services was up pretty good today. And then at the bottom, you had gold stocks, insurance and then oil services. So you have this situation with financials, which are one of the charts we've talked about a lot over the last week, the XLF in particular, coming off of resistance. And now you have insurance companies being one of the weaker places. There we go. Finishing up here down, looking at some of the bonds, the TLT, the bond ETF. We're going to talk about that in a little bit, down 0.8%. We'll look at a chart of the TLT. I think as a quick preview, maybe one of the 3 and 3, if I remember right, because the TLT, with the bond ETFs, you have the TLT, you have AG, you have a couple different ones, but all of them arguably putting in a lower high right now. And if that's the case, then that might indicate some sort of shift from from bonds to stocks. We'll have to see how that actually plays out. And then copper, actually notably, was one of the few things up on the day when you look in commodities. Down at the bottom, you have nat gas, coffee, and livestock futures. The dollar up just a little bit at 0.2%. Let's take a minute and just put some quick context on here. Thinking about the market recap. Here we go. It's looking at some breadth. So if you think about it, right, with breadth we've talked about before, and we've mentioned this chart a number of times. And this is one I always come back to just to see how the breadth picture is actually playing out. And if you look, this is the S&P 500, the percent of stocks above the 200-day and the percent of stocks are above their 50-day moving averages. And what's concerned me, big picture about stocks, is every time that the market has peaked, and again, we had a little bit of a lower peak this most recent time, but look how less and less stocks were participating, right? Less and less stocks going back above their 50-day moving average. Most recently, about 75%. That got down to about 35%, bubbled up into Friday with stocks kind of come out. So it's sort of half and half right now. About half of names are above their 50-day, half are not, which in my opinion sort of goes into that mixed bag sort of category. I also wanted to go back to the sentiment readings. We talked about the VIX on Friday, but I wanted to look just for a moment at the AAII rankings. So this is a good measure of sentiment. If you're not familiar, it's the American Association of Individual Investors. It's a weekly number that comes out every Thursday and shows you, are you bullish, bearish, or neutral for stocks for the next 6 months, if I remember the survey right. And over the last couple of weeks, look at how that has come down. This is sort of an artificial holding pattern right here. It's just showing you last Thursday's result until we get the new result for the week. But look at how that's come down. The bullish number from 35% to 30% to almost 20%. So it shows you as stocks have sold off, less and less people sort of feeling encouraged, individual investors feeling encouraged, definitely more bears than bulls, which is a notable shift that hadn't been the case there as the market was retesting its previous highs. So it definitely shows you that people are sort of processing the downside, processing the negativity, and some of the distribution patterns that we're seeing from U.S. stocks here. So that's a market recap for the day. Interesting movements. And as we go through, we're going to talk about some other themes. And next, I wanted to go through the sector setups. This is a new segment we toyed around with, just kind of breaking down some of the sector movements. I've looked at a lot of sector charts when we've been talking together, but I've often found that just having a regular time where we step back and look at the 11 S&P sectors, just think about where the movements have been and make sure you follow all of them. Now, these, as you watch me use StockCharts.com on the show, you'll notice I use Chrome with a bunch of tabs open, and that's just become my strategy of doing this. And for me, it helps because I can reload all the tabs and then just go one after another and process all the buckets of charts that I want to pay attention to. So I want to show you just the sector piece to that work and sort of how I make sense of it. This is the RRG charts, and if you're familiar with these, if you've heard Julius de Kempener, who created these, I've known Julius for years, and he does a great job of sort of explaining how these illustrate rotations of different asset classes, different sectors, different stocks, industries, all around the S&P 500 in the middle. And if you're not familiar, I'd encourage you to go to Chart School, learn more about the relative rotation graphs. They're a really, really cool visualization of anything rotating around a benchmark in the center. So just to orient you here, what we've seen over the last number of weeks here, last 6 weeks, I'm putting it in motion here. So I'm taking the chart of the S&P, just kind of rewinding a little bit. I'm going to do this just so we can see all the sectors here. We can see in the last couple of weeks, look over here in the upper right, how utilities, real estate, staples have emerged kind of out of nowhere to becoming some of the best sectors over here. And the furthest to the right means it's outperforming, to the left means it's underperforming. And then the y-axis sort of gives you the rate of change, or the momentum behind those movements. So essentially, further to the right means it's a better relative bet historically now, looking at the last couple of weeks. So this is, again, one of the things that's concerned me about the broad US equity markets is this rotation from traditional offense like technology, like discretionary, into the more defensive things like utilities, real estate. Staples not as good, but certainly one of the top three. It's noteworthy, though, if you look down here, look how technology has just started to hook up. Discretionary has just started to hook up just in the last week or two. And again, it's still very, very early days to consider that being a rotation of any sorts as real estate has rotated lower a little bit. But it's something that jumps out at me. That's something I would want to pay attention to and see if that actually emerges. Looking at the RRG for many, many years, one of the things we found is something that rotates down into the weakening quadrant and then rotates back up. A lot of times those end up being some of the better signals out there, out of all the different patterns, all the different configurations. And if you think about it, it goes back to what we've talked about on the show before, that sort of the fat pitch chart of having a strong long-term trend. You are weaker in the short term, and then you rotate higher, and it's sort of a buyable dip, a buyable pullback within a stronger long-term uptrend. And we'll see if that plays out. But that's sort of the configuration I'd be looking at, see if consumer discretionary pulls out of there. So far, the RRG certainly indicating more of a rotation to defensive. And over on the far left side, you have energy. And again, until it starts to rotate maybe northeast a little more than it is, it's basically saying, stay away. This is an outlier way off to the downside. Let's look at some of these sector charts individually, and just a couple themes that I picked out as I was reviewing these earlier. I love to start from sort of this view and take a sense on the candle glance of how many sectors are in which configuration. So what jumps out at me is you have a number of sectors that were looking pretty constructive, but then failed to make a higher high. And essentially most of them did. But in particular, you have communication services, you have consumer discretionary. Look at how it sort of hit a similar level. Consumer staples, financials, most of these really, really close, but unable to eclipse it. Really the only one that did, with a similar pattern was industrials. It kind of got to a higher high, but since then it's pulled back to the 200-day moving average. The real outliers here, if you look at it, are utilities here on the right, real estate at the bottom, right? And these are the two, essentially really conservative parts of the S&P, right? The real sluggish utilities and also REITs down here at the bottom. So the fact that those are the two that have actually been in a consistent uptrend tells you a little bit about the configuration. It also shows how much energy has been an outlier. We're going to jump into that chart here for a moment. So I've gotten questions so far about energy, and anytime it bounces, I feel like as a technical analyst, I get someone asking me, is now the time? Do I want to get into it? And for me, I always want to take a step back and just say, is this in an uptrend or a downtrend? And what we've seen with energy is a successive pattern of lower highs, and I think this one most recently, second week in September, we rally up, really getting near those previous highs on the XLE up to 64. It didn't get there, failed back below the 200-day moving average. Now it's below two downward sloping moving averages, underperforming consistently. So until you get some sort of sign of accumulation, I think you have to hold off. It'll be interesting to see if we hold this as a higher low. That would be the first sort of indication, and then you want to see if we get some accumulation from there. But nothing yet. I don't think it's something you could get too excited about just yet. Second thing is looking at discretionary versus staples. I've shown you that ratio chart a number of times. It's been part of the 3 and 3 and chart that we've looked at before, but it's definitely an important one. And I would just say, look at the movement of discretionary stocks back below the 50-day over the last month versus consumer staples remaining above its 50-day over the last month. So you have this, situation where some of the better charts are emerging, I would argue, in staples, whereas in discretionary, you've got some really weak patterns, or certainly, much less strong patterns emerging. Third one's financials, and we talked about that last week a good amount. We had this really significant resistance level around 28.30 to 28.50. We hit that a number of times, have sold off. The 200-day moving average down here in red is a really important one that we bounced off of. And again, we've arguably maybe made a lower high here, and we have sort of this shooting star candle, which is a low body with a high upper shadow based on today's trading. So we'll see if we continue now on the next downlay. And then the last theme I would say is just this rotation to defensive. Right, look at how utilities, real estate have just remained up and to the right, while a lot of these other sectors have struggled a little bit. So I'm definitely, those are some of the themes that I'm seeing on the sector charts. And again, the way I look at these is starting with the RRG, starting with the relative rotation graph. The fact that you can put this in motion is such a cool feature. I'd encourage you to do that. You can also look at industries and look at individual names on here, but this is a great way to just illustrate, visualize that rotation. And then the individual sector charts. And what I like to do is start with the candle glance and just look at some of those general themes. What's in a strong position, what's in a weak position, what looks similar, what looks different. And hopefully this helped you sort of pick out some of those themes that I saw on my work with some of the sector setups. We're going to take a brief commercial break, then we'll be back with my guest, Danielle Shay of Simpler Trading. See you in a minute.
StockCharts is unique because we combine the commentary, the education, as well as the tools in which you need in order to analyze the markets.
The human component around it with all the commentators that we have. I mean, look at the lineup with Murphy and Pring and Morris. These are household names in the industry. They're all tied to StockCharts.
People are always surprised with how many tools are on there that they didn't know about. 5 or 6 different methods for finding relative strength as an example.
Not only do we have these really great chart tools, but we have this amazing chart school, and you have these shows, and you have all these ways that you can learn.
Hello, everyone, and welcome back. This is Dave Keller with StockCharts.com. Thanks again for joining us on the final bar. It's been a pleasure to sort of unwrap the market's activity, the market's movements after the close. And today I want to welcome on my guest, Danielle Shay of Simpler Trading, to sort of give her take on what she's seeing in the markets. Danielle, thanks so much for coming on the show. I appreciate it.
Of course. I'm so happy to be here.
Great. And you sent some charts ahead of time, which I'm showing to you now. The first one was really interesting because you mentioned the key line in the sand. I'd love for you to talk through what you were seeing there.
So I loved everything that you were talking about with a variety of sectors, the strength and weakness, because that's exactly in line with what I do. And I bring that back, to the S&P, and I really start from a top-down approach. And starting off with the S&P, first of all, I mean, we're in this situation right now where we're stuck at this 2950 level. It's a key area of resistance. You can see the amount of times that we failed here since July, right? And so within that, I'm looking for 2 different possibilities. If we can break up above this level, what I would like to do is I'm going to trade those relative strength names to the upside. However, if we start to fail, then I'm going to focus on shorting the weaker sector. So it really goes back to exactly what we were talking about during the beginning portion of this segment.
It's really interesting. And I think your chart here, it's funny, as you show the line in the sand, it strikes me that we're literally right in the middle of this, right? And
yes.
It's exactly how the markets fell, right?
Yes, no, exactly. I mean, we're right here. And I feel like the market has been incredibly news driven as of late, more so than it has been over the past couple years. And, within this, I mean, what we do, and I know it's a little bit different over at Simpler Trading, but what I do is primarily short-term options. And so for me, I'm looking for, options trades on a 2 or 3 week basis for a breakout in either which direction.
Got it. The second chart you sent over was, I think you called it your radar. Can you just explain what you're seeing here?
So what I like to do, very similar. I love the graph that you had. That was very, very helpful. But what I like to do is I look at my radar screen and I focus on this one in particular are my favorite relative strength indexes. And so I've been focusing on the spiders or the S&P to the upside because you do have those sectors like you were pointing out that are still leading. For example, consumer staples, utilities, they're still strong, right? And so within that, you have the S&P that's strong. I also like to look at tech, communications, and then discretionary, because those were the sectors that were previously strong. If we can get a breakout in the indexes, I would like to trade them to the upside. And then I also like to look at Sky as well as SMH, because the cloud and the semiconductors are 2 really important industry groups. And so I like to look at all of this at one time to see which one is strong in relation to the others.
That's really interesting. Tell me with the Sky, that's one that I've not shown a ton or followed as much. How do you think of that relative to something like semiconductors, technology, and other? What does that tell you in particular?
Well, so what I like to do is I like to pick out specific industry groups, and cloud computing has been incredibly strong. It's been a really high momentum area, and you can look at individual stocks. I mean, you can look at MDB, you can look at Microsoft, Veev, WDay, But a lot of those are so volatile that it can be difficult to see what is actually going on without looking at a variety of them. And so for me, I just like to look at the ETF to start off and to see what, the basket is doing overall.
Very, very interesting. Okay. And then the final chart that you sent was of the XLK in particular. So can you break this down for us?
Yes. So XLK is very interesting because it has been one of those high momentum areas, but it has been losing steam over the past 2 months or so. However, within the last 2 trading sessions, we have seen XLK come up above the 50-period simple, up above those key moving averages. One of the indicators that we use a lot is the squeeze. So we're just essentially looking for consolidation and breakout. And you have that consolidation right now within XLK, and it has that potential breakout. And we also have big tech earnings that are coming up in about 2 weeks. So for me, that chart looks like it's going to break out one way or the other prior to big tech earnings.
Got it. So would I be fair in saying then I've often thought with like talking with John Bollinger, it was always about, this rotation from heavy trending markets to more, sideways consolidation markets, right? So something moves and then it kind of consolidates, comes to an equilibrium or digests the gains and then kind of goes. It sounds like you're describing with the XLK, we've kind of hit that equilibrium point. Now we're just waiting to see which, who takes control, the bulls or the bears. And then would it be fair that the direction of the breakout, that's what you would follow? Or how would you think of it differently than what I just said?
That's absolutely correct. And so normally I'm primarily a trend follower. And so normally the way that I trade consolidation patterns like this is I look for it to break out in the direction of the trend, which would be to the upside. Right. In this unique instance, with the ongoing macro climate that we have, and we have just this weakening market, like you've talked about, right? You have those high momentum sectors that have been weakening. And so those undertones of the market are very striking. And so in any normal situation, I would trade this incredibly bullish, but because of those undertones, I'm being a little bit more cautious with it. And I'm going to wait for that momentum. I'm focusing on a couple different relative strength names. I like Microsoft, Google, Akamai, focusing on those to the upside with caution. And then when I get a little bit more momentum, I will definitely follow that momentum going into this earnings season and then beyond earnings season.
Well, a stock like Microsoft, right, one of the biggest stocks in the world, if that is resolving to the upside, it would be hard to feel that bad about the markets as a whole, I would say, right? That's a great take, Danielle. Thanks so much for coming on. I'd love, as these trends emerge, as we resolve one way or the other, I'd love to have you back on and sort of see what your work is telling you then. Is that all right?
Yes, that would be great. Thank you so much for having me.
That's great. Everyone, thanks so much for Danielle Shay for coming on. We're going to rotate now to shifting stocks. So as Danielle was saying, there's a number of names besides the sector work, and listen, credit our producer Gretchen for booking Danielle as a guest and then having us talk about sectors. That's such a great way of thinking about it. But I'd love to rotate now to some of her questions on, Microsoft and Akamai, some of these other names. What are we seeing from different individual names? What sort of themes are we seeing there? So for that, I like to go to the members dashboard and I like to look at what's kind of moving one way or the other. I have my page set up this way so that I'm always looking back to what names are really getting it done. These are the top 10 stocks according to our scooter rankings, which are the StockCharts technical rankings. It's a proprietary measure of trend, and the stronger the number, the stronger the trend, essentially. And KLIC, a semiconductor stock, has consistently been at the top. You saw Danielle's chart of the SMA to the semiconductors ETF, and strength in stocks like KLAC are certainly making that look pretty attractive. It's also noteworthy again that a lot of the home builders like Lennar, Pulte Homes, all popping up on the consistently at the top of the scooter rankings. Let's look at what's moved around so far just today very quickly. Moody's is one that jumps up at the top of the list for a strong move to the upside. Moody's at times has been one of the strongest names anywhere. If you look at the last year, look at the relative performance. It's up 28% on the S&P just in the last 12 months. Kind of taking it from that start date. And what's happened is after this pullback, just getting below $200 a share, turns right around in the last couple of days, kind of rotating back to the upside. So, potentially starting to improve a little bit. I'd love to see the relative strength follow through maybe a little further than it has so far, but that's an interesting one. Amgen also, healthcare, I find it's all I can think about, or it's something I totally forget to look at because it's sort of been in the mix, right? It's sort of a yawner. And if you look at biotech in particular, in the form of Amgen, look at how this has been in a pretty good downtrend coming off of the highs in August, rotating back higher, now threatening to get back to the 200 level, which was the resistance the last time that we rallied out of the lows. It's a really key level for Amgen. So good to see it sort of pop up a little bit, but boy, you really want to see it break through resistance to sort of suggest further upside. Last one I'm going to show you on the upside is a semiconductor name, AMD. This has not looked as attractive as some of the other semiconductor stocks, and you can see how it's been sort of flustering a little bit. Relative strength has been a little bit weaker. It's improved, over a little bit of time because it's kind of come up a little bit. Boy, today's candle is not the most bullish thing I've ever seen. Sort of that, again, don't worry about candlestick analysis. Just think about what happened as we opened up and closed back toward the lows. So we'll have to see tomorrow if there's some sort of upside follow through or whether that's sort of it there. Looking at some of the stocks going down in their scooter rankings, things that are losing momentum according to our rating. CERN is one that pops up. This is in the healthcare sector. It's an equipment name. And again, what concerns me about stocks like this is just this consistent downtrend of lower lows, lower highs. And until you see some sort of stabilization, maybe we're finding support here, but we really have not yet. So that's a little bit of a concern. And then the other one I wanted to show you was Harley-Davidson Hog, right? And this is testing support. It kind of popped up on my list as arguably testing support. We'll have to see if that follows through or not. So that's shifting stocks. Again, I love to look at the scooter rankings and just see where we're seeing movement and where we're not. We're going to finish off our show today with the 3 and 3. And this is a daily exercise of looking at the 3 charts that I think you want to have in 3 minutes. And I'm finding I routinely give myself less than 3 minutes, but I'll keep getting better at this, I promise. The first chart I wanted to share with you was the factor returns. And this is going back to the market low in August. So it's just looking at the last 2 months and change, just looking at the factor returns from that point. So we have the S&P here in black. And then we have in purple the minimum vol ETF, USMV. We then have quality. And then here down at the bottom, we have value, we have momentum, and then we have size, right? Which is essentially playing on the small versus large theme, betting on the smaller names. So what's interesting is over that period, you can see how value really exploded. And this is when we're all talking about sort of the return of value. It settled right back down. And again, from the market low in August, it's back below the returns of the S&P. The things that have been working over that period overall, quality, minimum volatility. And so that quality theme is one I saw in the Wall Street Journal thinking about, quality over the weekend. I was reading that. And so, something to think about in terms of how we emerge from this sort of sideways congestion area, what sort of leadership themes we see from factors. Second chart is looking at Apple, and I've always joked that, with something like Microsoft, something like Apple, when a chart like this looks like this, it's hard to be that negative on the markets. And you'll hear in my descriptions of things, I definitely have a feeling of caution with some of the negative patterns we're seeing in breadth and elsewhere. But again, a stock like Apple, it looks like making a new closing high or, very, very close to it today, maybe matching Friday's high here, very close. But overall, in a very constructive pattern, testing resistance. If we get a breakout, a confirmed close above resistance, boy, what a vote of confidence for the market as a whole if a stock like Apple is in a pretty good upside. It concerns me just a touch that we're becoming overbought right as we test resistance. So we'll have to see it's on double top watch. We'll have to see how that plays out. The third 3 and 3 is the TLT. This is the Treasury Bond ETF. One of the ways to sort of bet on long-term Treasury prices. And in this case, again, what I was mentioning earlier, I'm concerned a little bit about a lower high. We'll have to see, it rallied up on Friday. Today closed down a little bit. It'll be interesting to see if we get some sort of downside follow through. The RSI went just above 60, did not get up to the overbought region. And again, in a bullish phase, like you see for most of this chart, the RSI remains elevated. It never gets below 40 really, and it tends to get above 80. We arguably are kind of reversing that, right? Where the RSI isn't giving much above 60. So I'll have to see if that plays out or if we continue lower. That's the 3 and 3 for today. Ladies and gentlemen, thanks as always for joining us on the Final Bar. This is a 30-minute recap of market activity and focusing on the visualizations we can do to make sense of the long-term trends. You can email us anytime on the Final Bar at StockCharts.com. We're going to have a Q&A mailbag tomorrow. So if you have any questions you'd like us to consider, Just hit us there, and also on Twitter at any point at FinalBarSCTV. Have a great day.